All right, guys. Hello. How's everyone? Another week starting. Very good week for us. I hope everyone had a good weekend. Last week was a very nice webinar. We had plenty of good opportunities on the market. Just gonna wait maybe 2 more minutes and we should start it because I know a few people will come. So yeah, just waiting for that. Then we're good to start. Let's have a look first on the positions we were discussing last week, last Tuesday. As usual, we do that every Tuesday that we do the webinar. Next Tuesday we're gonna recap the ones that we had this week. So let's run across a few things here. I've mentioned about euro dollar, right? Unfortunately, I don't have the draw here. But what I can do is I can just come on my recordings and I can go into somewhere here. Don't worry, we can do that later. But anyways, so last week I've pretty much mentioned it that here recordings here, this one. I'm just gonna try to show you guys how it was for the last week one. So then you guys know that I'm not lying or maybe trying to move numbers around and so on. But anyways, for those who are here, soon as the record, it's processing. Anyways, I've mentioned that we would have something up to this area, but we did had a bit more than expected. So on this top here, but it didn't break out. So sorry for those noises on the background, guys. So sorry for that. Hopefully you don't have to worry about it. So we didn't break out this area. Well, to be honest, like, yes, we did, but like a very, very, how much it was? 20 points. So it was pretty much nothing. So nothing to worry about it, like the break off this top, and if we add volume, let's add volume here. It was a low volume. Right, so we had massive volume on these candles, but we had low volume. Let me check it up for a bit of zoom and put it in 1 hour. So we had a low volume on the on the breakout. So nothing really happened here, of course, because not much people were willing to buy on here to continue this upward movement. So then news heated up the market and we came just back where the area I was mentioning. So I'm mentioning the area at 1077, 1077, 1077. So I've mentioned this area. We've just hit it up a few minutes ago. So this is a 1 hour chart. We've just hit it up basically 1 hour and 4 minutes ago. All right, so it was really good. This trade was really, really good. Let's move on. Let's go for the US dollar. Again, I've mentioned again that the US dollar, could go even higher than that. And my next target would be at 105. So we are very close to 105. So my target for this week would be around 105 for the US dollar. We keep trending. That's a beautiful trend, ups and downs, high lows, high highs. And yeah, there's nothing to pretty much look at it in terms of technical analysis. That was pretty good. All right. Next one. I've mentioned about New Zealand dollar, right? So right now we are actually on the move. So that's really good. We had, what I've been drawing since 2 weeks ago. So last Tuesday, we had the market consolidating in this area. And then on 29th, that was the first, 22nd, that was the first webinar we had. I've drawn those 4 hours here, you know, that we had a up move upside. Yeah, on the 29th, sorry, 29th. So that was last week. So last week I've mentioned that we could have a bit of a up move, but primarily the NZD USD for me, it's bearish. So this is why, you know, we have this move up to this area. Look, if you're considering this as a breakout, yes, you are right. We did had a breakout on this area somewhere, you know, like here. But New Zealand dollar is so weak that no one is willing to buy New Zealand dollars at this point here. So everyone is willing to sell it, right? So no need to worry. And yes, we can keep going down. I have a few targets that I'm going to mention later. But that's a good trade as well. The trade is working out on our favor that I've mentioned last week. CHF JPY. We just touched the area that I've been mentioning since the first webinar. So I've mentioned up that we had this move up, but then I was waiting for something to get on this area to long it again. You know, that's my trade. That's my trade. Nothing to you guys to do. And then I would be longing somewhere around here to 168.5. So that's my target here. Right, still pretty quiet market on CHF, but I still pretty bullish on CHF and very bearish on Japanese yen. Right, moving on, we had as well AUD CAD. For those who don't know, let me show you something. Let me pull it out. Teams here pretty quick. This one. So if you guys don't know, we have FinLogics and we have like a community. We have a community there that few analysts and, you know, traders posted up they ideas, I would say, positions, ideas, you know, interact with everyone there. And on the 31st of August, so that was last week, Thursday, I posted up this position, right, on AUD weakness on CAD back. And primarily, my short position on AUD CAD was recommending, you know, considering a short position on AUD CAD. That was my best trade off last week. And the rationale for the trade was that over the past fortnight, I've observed that a note of reassurance on AUD crosses. So, however, my analysis suggests that the current market environment presents an opportune moment to initiate a short position. My decision is informed by several factors, so the upcoming Chinese data, the Australian inflation trends, and the USD strength anticipation. I do think that USD will keep strong for this month, for the whole month, right? But anyways, I've break it down the whole position. I will put this link on the chat. You guys can click it. There's nothing to worry about it. So then once you click it, you're going to be to this page. If you want to, you know, see my profile, you can just click on my profile, and it will open my position. So USD JPY still have strength to push it higher. So that was on August 29, and then 31st, we had these short AUD CAD, and then we had long AUD at the moment. We had this one short euro dollar. Yeah, so most of, you know, the positions are here. Most of my trades are here, right? Anyways, so and then if you click on play, basically you can see how the trade had progress. So basically I had the entry here, my stop loss was here, and my take profit is here, and that's my position right there. Okay, so that's pretty much what I've been doing. Next one, USD JPY I've mentioned a lot. Yeah, there we have it. I've mentioned that, you know, my first target would be 147. And yes, we did hit it, 147. Then we came down, as I mentioned, to this area again, and now we are looking at 150, right? So if we get a very impulsive move to break those highs somewhere there, you know, so these highs here, and we can get easily somewhere around the middle of this range, but we want you know, we won't just go up. We have to retrace somewhere around here again, and then we can come up. But that's very data dependent. We're going to touch a base a bit more on that afterwards. AUDCHF I've mentioned as well. I've been mentioning this like for ages already, since my first webinar. Sorry guys, let me just drink a sip of water. Right, so as I've mentioned, I've been in meetings the whole day, guys. Sorry. As I've mentioned, well, that was on the first, webinar. We had this box, this formation, right? Indeed, yes, we did get off from here, but we did move up a bit more than I was expecting. But there we have it. That's the move that we were expecting. So there's nothing to worry about at the moment. And I think, yes, we can proceed to the 0.556. So somewhere around this area here for the next maybe month or so. For those who are more technical into the analysis, we did had a pullback somewhere here on this leg. You know, we had a pullback up to 50% of this leg down, and we're moving the way down somewhere here. If we do FIBA projections, we can see the last leg. Just a moment. There you have it. So the last leg would be, that's high to here. Yeah, that would be somewhere here. Okay, I have to do the big one, Norris, just so we know a bit. Yeah, so the first target would be somewhere here. The second target would be somewhere around 54.74. But primarily that would be it. Okay, for AUDCHF is still holding my positions. Well, GBP USD, there we have it. As I've just mentioned, you know, big up move, well, short push to upside, and then afterwards very bearish momentum, and then again, you know, as a trend, we have to come back, retest the area, and now we are keep rolling down. That's really good trade as well. Euro dollar I've just mentioned, NZUSD already mentioned, NZD-CHF. Okay, this trade here, not too much keen to trade it anymore, just because it's out of my, you know, my guidelines. I would say it was too far away, not looking to chase this trade anymore. Yeah, nothing to do here anymore. CHF already told. CAD CHF nothing. GBP CHF is still on the range. Pound yen, gold, USD CAD. Yeah, USD CAD. I've mentioned that we could have a big impulsive up, but I haven't done any analysis on it. I've just mentioned that we had a more strength US dollar than CAD. And then AD CAD. All right. So that's the reviews from last week positions. Does anyone have any questions on that? Did I forgot anything? So then we can move on. Okay, cool. No one. That's good. Seems like the things are getting clear to you all. Okay, guys. First thing I want to talk, and I think that would be the, you know, the big talk for the day, will be the RBA, right? So we did have RBA just today. So oopsie, it's here. Chart. Nope, not here. Calendar, economic calendar. So today, oopsie, Australia. All right, so we had the Australia RBA interest rate decisions, right? Today, 2:30, it was 2:30 in the afternoon for Australian time. as forecasted, as widely expected, they've maintained the rate at 4.1%. So that was nothing out of context and nothing to worry about it. The previous 2 meetings, everyone was expecting that they raised 25 basis points. So the forecast was actually to 4.35%. But they didn't, so they kept the rates unchanged at 4.1% since July, right? So since July, they've kept the rates unchanged. So that's already, let me check. So 1, 2, 3 meetings, actually 4 meetings, without doing anything, right? So they've only kept the rates unchanged. The interesting part about this is that if we search RBA rate statement on Google, you guys can do that with me. So I'm going to wait for everyone. So if we do RBA rate statement, right, just Google it. And the first link would be 2023 Monetary Policy Decisions, Reserve Bank of Australia. That's on rba.gov.au. We click on that link, we're going to be redirected to this page, and we can select the one that was today, September 5th, 2023. And we have the rate statement here, right? So on the meeting today, the board decided to leave the cash rate target unchanged at 4.10%, and the interest rate paid on exchange settlement balances unchanged at 4%. So they haven't changed anything here, pretty much. And if we look, let me just do something here. And the 1st of August, we did have the exactly same line. So they haven't changed anything, right? They haven't changed anything on here as well from last meeting to this meeting. So they're just saying that interest rates have been increased by 4% points since May last year. The higher interest rates are working to establish a more sustainable balance between supply and demand in the economy, and will continue to do so. So they're just saying that, higher rates are helping the inflation to come lower, and it will continue to help. What they have changed is they have changed a few things on this line, right? So inflation in Australia has passed its peak, and the monthly CPI indicator for July showed a further decline. So what they interpreting here for the economy in Australia is that the inflation is already gone. So we won't have any higher inflation anymore. So they are expecting that the peak of the inflation has already reached. So what they mean by that is, oopsie, the wrong one, sorry, not this one. I want pi. There we go. So what they mean by that is that, the inflation has already peaked. So that's the peak, right? And they are now expecting slowly moves down and not more move up, right? So we are on the peak of the inflation, and we're expecting further decline, right? But inflation is too high, so they acknowledge that inflation is too high and will remain for some time. The prediction is that they get the inflation to target, that's the 2 to 3% target range, late 2025. I know, right? It sounds, wow. It's like, wow, 2025, they will only get inflation down on 2025. Yep, that's exactly it. They will only get inflation down on late 2025. Not only on 2025, but the end of 2025. So we still have all of those months here until December 2025 to get inflation to 2 to 3%. All right. They stated as well that the Australian economy is experiencing a period of below trend growth, and this is expected to continue for a while. So they're saying pretty much that, oh, I can actually annotate it. Oh, that's good. So let me here, late 2025, for some time yet, is this too some time yet, and then experience a below trend growth. This is expected to continue for a while. So as well here, they're expecting inflation, Australia economy to perform very bad for a while yet. So they're not expecting anything good to happen in the soon, anything soon, right? Sorry. What else they have stated? Oh, and then the most important part in the end is that they've stated there was a significant uncertainties around the outlook. So pretty much they don't know what's going to happen here until, who knows, until the next year or so. So that brings a bit of fear to the market, and that's a very bearish rhetoric, right? And then just in the end, they haven't changed anything as well. So some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable time frame. Well, that will continue to depend upon the data and evolving assessments of risks. So pretty much they've been bearish and hawkish at the same, dovish and hawkish at the same time here. That means that they are trying to do something bullish, but they can't because they are data dependent. So being data dependent on the market is something very bearish, right? So, and they state what they will paying close attention. So they will paying close attention to the global economy. So how the developments on around the globe will, keep going. The trends in householding spending and the outlook for inflation and the labor market. Right, so that's the things that we have to pay attention for Australia in the next, this month and next month. So then we reach the next RBA rates decision. Right, so any questions on here? Pretty much what they have done already, analyzing AUD, pretty short, I still pretty bearish on Australian dollar. Well, first of all, because of this now, and second, just because inflation is too high. But it's below the 5%, but it's still pretty high. And the RBA, the Reserve Bank of Australia, is still on a very dovish rhetoric, and they are not. I don't see the RBA raising rates pretty much anytime soon, right? So pretty much bearish on AUD. So AUD USD sorry, where is it? Oh, here, AUD CAD. So AUD CAD is to my preferable short position in here, as well as AUD CHF, as I've been mentioning already a few times. Okay, so JPY, Japanese yen. Well, where's the JPY here? JPY is still pretty much short. It haven't changed anything since last week, right? So last week I've mentioned for you guys that the interest rates is still negative, and the monetary policy is still dovish. So that means that no one wants no one wants Japanese yens. No one wants to invest in Japan. So mean that, like, having a negative interest means that if you put your money there, you're actually not gaining anything back. So why would you put your money on Japan if you can put on US dollars? Let's say that you're getting 4.50% back every year doing nothing, right? It's better than put your money where it's not going to give anything, right? So as I've just mentioned, USD JPY would be a long position for me, just because JPY is very weak, but we need to pay attention very, very close, trading USD JPY at the moment, because Kuroda, as the Bank of Japan chairman, he's a bit tricky, and I've been mentioned this already since last week, right? Because every time he come to the media, he say that, oh yeah, we are having talks towards changing our monetary policy. What does that mean is they are looking to get off from negative interest rates to positive interest rates. And for Japan, this would be huge. And this would have a huge demand for Japanese yens, meaning that it would change my view pretty quick if the BOJ, the Bank of Japan, changes from a dovish approach to a hawkish approach on the monetary policy. So changing from a negative interest rate to a positive interest rate. But that would take time for them because they need, first of all, a positive inflation, because they're having this deflationary scenario at Japan at the moment, meaning that inflation are negative. So for them to change the MPC, the monetary policy, they have to have a positive rate, and they not anything soon on it. So yes, it would be a very big trade, but not anytime soon. Okay. Now let's move. Oh yeah, CHF JPY as well. You know, I'm talking about JPYs too. CHF JPY will be another good opportunity to trade JPY. Okay, moving to New Zealand dollar. Let's talk about New Zealand dollar. Well, I've been mentioning already, you know, New Zealand's not good. New Zealand's not good at all. New Zealand was the first country to bring the interest rates to 5.5% mark, and they decided to stay there for a while. They haven't, you know, changed anything since the last meeting. Anything on the economy is looking bad, so there's no signs of data becoming better anytime soon. And I've mentioned last Tuesday, that any positive data that would come for New Zealand dollar would be an opportunity to keep you know, having those pullbacks on the market, like this one that we just had. Where's my arrow? Oh, I can just draw. Wait. This one. Like, let me change the color. Like here we have this pullback, you know. That's a good thing for us, that if we're looking to short New Zealand dollars, right? So I would keep on this mindset for a while. I wouldn't change my bias for New Zealand dollar at the moment, and not anytime soon as well. But yeah, look, very little, you know, retracements, because this is more a range than a retracement if we look. And I've already explained to you guys what's my entry strategy. So I would look to, you know, short positions here, here, and here. So what we can expect now, it's somewhere, some leg down, not that far, maybe somewhere here, and then, or maybe a comeback somewhere here, you know, and then, yeah, that would be pretty much what I would be expecting for NZD USD. Pretty good trade there. NZD CHF as well, as I've just mentioned, not on my radar anymore, but it's still a good position to have on your portfolio. CHF is the strongest currency for me at the moment, because, you know, low inflation, low interest rates, people can borrow money there, people can invest on there. It's a safe haven currency. Very, very good. So against a very weak economy, that's New Zealand, that would be fantastic. Next, let me see. I've talked about JPY, New Zealand, AUD, okay. CHF now. All right, let me just get back to USD CHF. I don't have it here. That's strange. It should be here. USD CHF right here. Right. Oopsie. Okay. So that's pretty tricky to trade New Zealand. To trade USD CHF, because both of the currencies are pretty strong, right? And I usually don't do that. What I do is I trade the weakest currency against the strongest currency. So let's say I have the weakest at the moment as New Zealand dollar and JPY. I wouldn't, you know, trade two wicked currency together. I would preferably trade a stronger currency against a weaker currency. That's my strategy, right? But for CHF, CHF has been one of the best performance currencies over the last few months and few weeks. Really easy to understand why. I've just mentioned, interest rates are positive, but they are very low. Political environment there, it's extremely stable, so people don't have to worry about like instability on the government and so on. Economy won't suffer, anything like New Zealand is suffering, in Japan. The central bank was always hawkish, so they have been always trying to, not trying, they've always been hawkish. So they're always proclaiming that, yes, they want to do more, they want to be better, and they, if needed, they will raise rates, and there's nothing over yet to fight off the inflation. That was pretty much the perfect mix, for investors to protect the money against the damages of high inflation everywhere else around the globe. So pretty much CHF as a safe haven is my best take. I would trade CHF JPY, I've mentioned already for you guys. All right. So that would be my preferable trade on CHF. Now, Euro. Well, what should I say? Since first, we had the first one on 22nd, I think. So yeah, 29 was last one. Yeah, 22nd was the first one. So on the 22nd, exactly here, right? Somewhere around here. I've mentioned that I would be shorting euro dollar from this level. And well, you can see, like I don't have to tell anything. Like it's just 1,168 pips. So it's pretty much very bearish for me, euro dollar. Euro is still in a very difficult spot for the economy. The ECB, the European Central Bank, has said many times that they would do anything to fight inflation. But more recently, the more like past, I think was 2 to 3 meetings from the ECB, they switched to a more data dependent approach, and this is why euro is going nuts at the moment. This is why euro is just losing, the whole strength that it had previously. Well, actually, it wasn't a strength. It was more a consolidation phase, because this time here, that was the ECB meeting. So all the investors was pretty much waiting for what Lagarde had to say for them. And she changed it, the completely approach. She was like, oh, well, we're going to be having a more data dependent approach from here. And this, the market didn't like it. So yes, keeping pretty much bearish on euro for that reason as well. We had, of course, very rough data coming from Europe, extremely bad PMIs. Inflation, of course, is still above the 5% mark. That the Fed, sorry, not the Fed, the ECB, mentioned to the market that they would be able to control inflation and bring it down to 5%. Well, they couldn't. So, another not good thing for the market. Very tough. They will probably increase interest rates a bit more, but this would damage the economy so much, and the whole eurozone, but as well doing nothing. If they pause, that would be very damaged as well, because inflation keeps going high and high. So they are on a very difficult spot. I wouldn't like to be Lagarde at the moment. I prefer to say on the sidelines that it's a very concerning currency, but very good opportunities going on euro at the moment. Still neutral to bearish on the euro, all right. And my best take would of course be euro USD as well, euro CHF. If I can find it here. We didn't had much move. I don't know why, because euro is so weak at the moment. CHF is so strong, but we are not moving anywhere. This is tricking me, to be honest, but that would be my preferable position on euro, and euro dollar as well. So I guess we can come much lower. I guess we can come to 10. Well, the range would be around 105. Let's see. I know it's huge, but this is a range, right? So 105 to 113. Sorry, 112. Okay, so that's the range. No, that's 113. That's correct. So 113. Yep. So let me take that off those two lines so that you guys don't get confused. Okay, so pretty much here is my range, right? So what I mean by range is that I'm looking to, ride, if possible, all the way down to 105 and then all the way up to 113. So in the long term, I'm talking about a few years, not like not a month or so. I'm still pretty bullish on euro dollar. Just because I think there's so much things for Europe to go well that I would love to see. I would love to ride something around this, But first we need to arrive there. And once we arrive there, we need to know if the economy is getting resilient, if it's getting, better and better every release. But for that, oh man, we do have a lot of work to do. So at the moment, I would keep shorting. That would be my preferably position on euro dollar, right? Do you guys have any questions? Can we move on? All right. So next one would be pound. All right, pound. Let's go for pound dollar. Very, very good position here. Very, very good trade. Very textbook trade, as I mentioned on my entry model. We had the box. That's a 4-hour chart. We had the box over there. We touched it on the top, we touched it on the base, meter. So that was pretty good. We came, retest the meter, and then we are swagging down now. Look, we can go to this level, right? 24.5, I would say. 24.5. Okay, 24.5 pretty soon. Okay. So we can still enjoy this downtrend here somewhere to 24.5. I've been discussing this many times, how hard things are for the UK economy recently. They have a very high interest rates, super, super high inflation, and a very bad economic components. So very bad data coming from UK. That's the kind of mix you don't want to be. That's, as an investor, you don't want to invest on a country that it's like that. You don't want to see the economy performing that bad. So therefore, no one is looking to hold pounds at the moment. Everyone is selling those pounds. But, the problem is a little bit more complicated than this because they're having a high inflation, right? So let me grab it here. So let me grab orange. So orange will be inflation. Inflation. Okay. So like we're having, let's say something like that on inflation. Right. Okay. And then in the black, we're going to have rates. So rates, they are usually in the beginning slower than the inflation. But ultimately, what you want is that this happens, that the rates is higher than the inflation, and that we have a swap differential in the middle of it. All right, so pretty much what the rate's trying to do, what are you trying to do when you're raising the rates is controlling the inflation or pushing the inflation down. And that's pretty much what UK is doing. But the problem here is they are so high on both of them. Inflation is so high at the moment there, and rates are so high at the moment there, that if they keep doing it, people won't be able to afford even like normal food, and the money will be so like it won't value anything. It will be like, you know, $100 would be like $20. $20 for them now. So the inflation, so then the central bank is on a very tricky situation, and investors as well. So that no one wants to touch pound at the moment. You know, so that's for now. I would keep my analysis the same as last week. Still looking to short the pound. Against any better performing currency, you know, like CHF, USD. We can have a look now. So USD is a good short. You know, we had this massive push up, and then we coming down now. GBP CHF as well. Where is it here? We're still on that range that I've mentioned. And yeah, that would be my two preferred big trades on GBP on the pound. Now, CAD. Wow, what a confusing week for CAD. Where is USD CAD? I'm blind. Sorry, guys. It's somewhere here. USD CAD. All right. What a massive trend, right? We did add a massive trend up, and then a correction, and now it continue to go up. Do I think it will still go up? To be honest, I do. But we're approaching a very important area, and I'm going to show you something to you later that big positions have been unfolded on the US dollar. That means that people are starting to slowly short US dollar. What people? I mean, big institutions like JP Morgan and those guys. How can we know that? That's no surprise. That's something very easy for you to get. If you go to CFTC, that it's a legal government from US, so CFTC, that's Commission's Futures Trader, Commodity Futures Trading Commission. This is where we can get the data from. So if you guys want, just let me know, and I'll show you how you can get this data from. It's like every week on Thursday for us, sometimes on Friday, just depends on them. We receive the leverage funds positions. So what that means that we can see how much positions they have added on long side or short side of the market. That's actually a very nice thing for you guys to have a look on. So if you search commitment of traders, sorry, you can have a look. Sorry, my one is Portuguese, translate to English. So the commitments of trade is a weekly report issued by the Commodity Futures Trading Commission that lists participants holding in various future markets across the United States and globally as well. So have a look on that. So then next week we can touch base a little bit more towards it. Even CMA has one. Let me check CMA. Let's have a look on CMA. I haven't looked this one before. Okay, that's good. Oh, that's natural gas. That's not cool. I don't want natural gas. Forex. Okay, euro dollar, Aussie dollar. What's this one? What's the date here? That's 29th of 8. Okay, that's last week. That's good. So we're having 686,000 positions long and 500, let's say 500,000 positions short. So we are more towards the long side than on the short side, right? So we are keeping a net position long. So if we basically do 686,000 minus 500,000, we're going to have 190. $2,000 positions. So that means that we are having a positive net position. So that means that the big institutions keep longing euro dollar and all of those currencies mentioned above here, right? But if we look on down here, we are having a negative net exposure to the market. So if we have 600,000 short positions and 300,000 long positions, so if you do one minus another, we're going to have minus 300,000 net position. So that means that we are short. So big positions are short. We have crypto, equity, fixed income, and so on. You can have a look on this one. I'm going to provide the link for you guys. Someone sent me a question. How about CHF JPY? Hey, AFL. Let me show you again. CHF JPY is too long on it, man. You know, we touch base on this area here. Now is the time for me forming a box. I don't see CHF JPY coming low anytime soon. So if we go for 1 hour, that's not what I want. If we come to 1 hour, you know, we may have some support area at least, and I would be looking to go further upside to 168,500. That would be a good trade for me. Okay. Now moving on, pound CAD. Okay, so coming back now to CAD. Sorry, guys. So I've just mentioned that, you know, we have a few big institutions unfolding their positions on US dollar. So that's something that we have to be on eyes. So the concerning about the Canadian dollar, you know, I've been saying so many times now that I think they reached the peak of the economy cycle, not the rate cycle, the economic cycle. So that means that the data that are coming there are too good to be true, and they, you know, it may be coming lowering down, and that will make Canadian dollar pretty weak at the moment. So, you know, we've may that's not 100%, nothing is 100%, but we've may be able to see some anticipation and some, I would say, talks about cutting rates on the BOC, the Bank of Canada, right? So for me at the moment, you know, it's still pretty big range there, and I'm bearish on the Canadian dollar, the CAD. Okay, so now let's talk about US dollar. Okay. Did I answer your question, Rafael? Is it all good about CHF JPY? Just give me a hands up and yeah. Okay, cool. Hopefully I helped you. Let's move on now. Let's go for US dollar. Right. Yes, thank you. No worries, man. Thank you. Cool. All right. This week, you know, one of the biggest week for US dollar. We had a lot of important data with the non-farmers payroll, the NFP, you know, even more labor market data, the PCE, the PMI, the GDP, consumer confidence, and all of those data. Overall, we are seeing some mixed signals on the US economy. We still have a sticky inflation, an increase in unemployment, so people are getting unemployed there. Decrease on job opening, so there's no much jobs, you know, opening to the public, so people are losing a bit of jobs as well. Consumer confidence and the GDP, you know, still extremely low. As well, the PMIs, very bad PMIs for US last week. You know, still the same questions that drive the DXY. Do we see rates cuts before year end, or do we have a pause until then? So that's pretty much what it's drive up or down or sideways or whatever it goes, the US dollar index. So the market wants to know if we are having any pause or if we are going to cut rates, not us, the FOMC, the Fed, if they will cut, if they will, what they will do. The market wants to know it. So pay attention on news from US. Let's say Powell has mentioned that they may be looking to cut rates until end of year. That's a big no-no for US dollar, right? That's a big no-no. But if they keep saying, look, we have to assess the data, pretty much neutral. Nothing changes. Okay. So that's the only thing we have to pay attention at US dollar. At the moment, its most expected scenario is that we are pausing this year, but we're not cutting. And Paul already mentioned to it, they've mentioned multiple times, we're not willing to cut rates until next year. But if needed to pause, we will pause. So that's a very, very big statement. And he's been mentioning it so many times until now that we don't even have to worry about it. Okay. But I still pretty much data dependent, and now, I'm more bullish to neutral to bullish in stance on US dollar. And I would prefer to trade US dollar against Japanese yen, euro dollar as well, I've just mentioned, and that would be those two preferable ones, and pound dollar as well. All right, so I think that's it for me today, guys. We've covered all the currencies. So just going again, so USD dollar is too short, Japanese yen is too short, New Zealand dollar is too short, AUD, sorry, is too short, CHF, I'm long, Euro, Pound, and CAD, I'm short. All right, that's my view. That's my personal take on those currencies. And I see you guys next week. Is there any questions? No worries, Ash. You're more than welcome, man. Thank you so much for being here. I think it was your first time here, eh? Good to know that you liked it, man. All right, guys. Have a wonderful week. And keep an eye on everything. All right, keep an eye on everything. You're welcome, Steve. Thank you so much. Yeah. Very nice to have you guys here. Very nice, very nice. All right, guys. Have a good night, and I see you next Tuesday. Bye-bye.